you just got to buy. Forget about the fact that it's $79, $80. Just be glad you can get it, because silver is going to be very, very scarce very soon. And the price, I think, will be a lot higher. And again, this is not just a precious metals bull market. Copper got above $6 this week for the first time ever. So it's all the market. Look at nickel, look at zinc, look at lead. I mean, prices are going up. And again, it's not just going to be metals. Agricultural commodities, I think, are going to really boom. Eventually, you're going to see oil go. I mean, it's held these lower levels longer than I thought. But even with what's happening in Venezuela, and I'm going to mention that later in this update, but I think that oil is looking strong and is bottoming. But this is a inflation-fueled commodity bull market, but also a supply shortage because of decades of underinvestment in capacity, in exploration, in development. So it is a perfect storm if you're long precious metals, but it's a disaster if you need to buy them, or if it will be for the industries that need them. But right now, investors need to take advantage of the fact that the prices are still not anywhere near where they're going to be, and we still have the supply. On the gold and silver mining stocks, I think as good as last year was,
Peter Schiff says 2026 could be even more explosive for precious metals. After gold plus 64% and silver plus 145% in 2025, miners now confirm the bull market. He warns physical silver is becoming scarce, inflation and dollar weakness are accelerating, Bitcoin failed as digital gold, and stocks are down in real terms. Thanks for watching. Give a thumbs up and subscribe to Fine Metals for the latest insights.
gold closed this week on a positive note, up just over $30 an ounce. We closed at 4,508, so above 4,500. Silver didn't quite close above 80, although it traded above 80 again this week. It traded above 82.50, but it was up almost $3 on the day, closing just below 80. I think it was 79.84. But percentage-wise, gold is already up 4.6% this year. This is only the 10th of the month, 10 days into the year. Of course, most of them weren't even trading days because of the holidays and the weekends. But you're up 4.6% already. Silver is up about 12.5% so far in 2026. So just picking up where last year left off, the precious metals bull market continues. Platinum again up about the same amount, I think, as silver. Also, look at what happened with the mining stocks, because another knock on the gold bull market was the lack of confirmation in the mining stocks, because the mining stocks were lagging. They're supposed to be leading. Mining stocks are supposed to be stronger than the metal in a bull market. That wasn't the case. But of course, that's why I was pounding the table, especially early last year. In fact, I put out a special report, I think in April, the best way to buy gold, and that was buying gold stocks, because gold stocks had barely gone up on the year, even though gold was above $3,000 an ounce. Well, the GDX, which is a gold stock index, finished the year up 153%. And the GDXJ, which has some mid-caps, more mid-caps, it's called juniors, but they're not really juniors. They're just a little bit smaller than the GDX. That index was up 166% last year, and off to a strong start again this year. The GDX is up 8% so far in 2026, and the GDXJ not that much farther behind, up about 7.2% so far on the year. The world is moving away from the U.S. dollar into gold. Now, what we haven't seen certainly not in the back half. Last year was a weak year for the dollar, but the last half of the year, the dollar was kind of flat. And in fact, the dollar index closed today at about a 1-month high, back above 98. But if you're looking at the dollar yuan, the Chinese yuan, the dollar is at a 2.5-year low today. It's back below 7-1, but it's a 2.5-year low. This is significant for many reasons. But one of the ways, in fact, the main way that Trump's economic team described how China was going to eat our tariffs, it was going to be their currency was going to go down. And because their currency was going to go down, that was going to bring down the price that Americans would have to pay for Chinese products. So Chinese were going to have a weaker currency to offset the impact of the tariffs. So even though the tariffs meant higher prices to Americans, a lower yuan meant lower prices because the dollar would go further. Well, the opposite has happened. The opposite of what Trump's economic advisors said was going to happen has happened. Instead of the Chinese currency going down, right, so that we got a bargain, it went up. There are companies that just mine silver, and they were the star performers of 2025. But again, given how cheap they were when the year began, they're still cheap now, despite tripling and quadrupling on the year. So even though we've seen this rally, you want to buy gold, you want to buy silver. Gold, I don't think there's very much downside risk at all. I don't think gold's going below 4,300. So if you're buying it now at 4,500, I think there's minimal downside in gold at 4,500, right? Silver, a lot more volatility, which to me makes sense given the magnitude of the breakout, right? You know, we blew through 50. I mean, we basically paused there for a couple of weeks maybe, and I was forecasting on this and on my main podcast that once silver broke above $50, it was going to be a moonshot and that 50 would be support. Well, 50 was only support briefly. I believe support is now 70. I don't think we're going down to 50 at all. The opportunity to buy $50 silver is gone. And I hope a lot of people took advantage of it before it left while it was here. In fact, all last year, I told people, buy 30, right? 30 is the new 20. Silver's not going below 30. Then I said, buy 40, 50. Now I'm telling people to buy $70 silver if you get the opportunity to buy $70 silver. The low of the pullback after silver got above 83 was just above 70. And ever since silver got above 80, it's never been below 70, although it's gotten down there. I think the real support zone is 71 to 75-ish. So that's probably the best place to buy it. But the problem is, I wouldn't wait for 71 or 72. I just buy it at 79 because here is the problem for long-term silver buyers. I'm talking about physical silver. I'm not talking about people who want to trade it on the COMEX, doesn't really matter. I'm talking about if you want actual silver delivered to your house, like we do at Schiff Gold, you just got to buy it now. And that's because I expect the premiums on silver products to soar in 2026. So you've got two things that are going to happen. You got the price of silver is going to go up, but the premium on the products, what you have to pay to actually buy a 1-ounce coin or, a bar is going to go way up because of the supply disruption. The precious metal bull market in 2026 is going to be de-dollarization, inflation, and a highly accommodative Fed. We know that Trump, I think he said he's made his decision on which of his flunkies is going to be installed to run the printing press in mid-2026, but they are going to run it nonstop. In fact, an indication of what Trump wants to do at the Fed was shown just this week with Fannie and Freddie, the GSEs, where Donald Trump is now ordering the GSEs to purchase $200 billion worth of mortgage-backed securities. Why does he want that? Because he wants to use government to reduce mortgage rates by buying mortgages. right? It's his own kind of mini QE run through the GSEs. Now, of course, where are the GSEs going to get the $200 billion? Well, I suppose they got to take it out of treasuries, because where is that $200 billion? It's just not sitting, in cash. It's probably in U.S. treasuries. And so they have to sell those treasuries to buy mortgage-backed securities, or it's money that the GSEs would have given to the U.S. government, reducing the overall deficit and the amount of U.S. treasuries that the government has to sell. But if now they're not going to get that money from Fannie and Freddie, they have to go into the market and borrow it. So this is kind of like QE, but what it is going to do is it's going to be inflationary, and it is going to push up rates on government debt as it somewhat temporarily reduces mortgage rates. It should do that in the short run. China's winning the trade war. Their currency is going up. And even though China's exports to the United States have gone way down since Liberation Day, overall exports have gone up. They're just trading more with the rest of the world. They haven't missed a beat. What Americans aren't buying, Europeans are, or people in South America, or people in other Asian countries, or maybe more Chinese are buying stuff, just the way I said. So China didn't need the United States. It's the United States that needs China. We need China for their products, and we need them to loan us the money, that we need them to buy our treasuries. And that is the other big problem that you're going to have. Look at the yield on the 10-year Japanese government bond, over 2.1%. I predicted last year that the yields on the 10-year Japanese government bond would rise above 2%. They were less than 0.5% when I made the prediction. But rising yields in Japan is going to put a lot of pressure on the Japanese government to sell U.S. treasuries. They are the largest holder of U.S. treasuries right now. They're going to be selling. They're not buying. And, of course, the rest of the world is not buying treasuries. They're selling. They're buying gold. They're going to buy more gold. I think central banks will buy more gold in 2026 than they bought in 2025. Not just the central banks that have already been buying, but other central banks who stood by and didn't buy. While other central banks did, they're going to buy, right? They're going to be FOMOing into the gold because they're going to need gold as part of their reserves. I mean, gold last year replaced the treasuries as the largest reserve asset of central banks. That is going to continue. That trend is a massive and important trend that is going to be going on and on for many, many years. And that is also going to fuel demand for gold. But now you're also going to have individual investors really stepping up their demand. They were pretty much absent last year. They're not going to be absent this year. This is going to be the year that Wall Street wakes up and discovers precious metals and the precious metals mining companies. The Dow is almost 50,000. And people think, oh, that's such a big number because, it was 10,000 26 years ago. Yes, it was. And gold was under 300. And now it's over 4,000. Silver was under $5. And now it's $80. So, yes, in terms of dollars, the Dow has gone up. But in terms of real money, in terms of gold and silver, the Dow has gone way down. See, that's one of the reasons that politicians love inflation, because they can claim that we're getting richer even as we're getting poorer. Because it's easy to make the stock market go up if you're measuring it in currency where you destroyed the value. So if you debase the dollar, look at how expensive the Dow is. Yes. But look at how much more expensive gold is and how much more expensive silver is. Oh, and I totally forgot to mention. Bitcoin. I can't believe I was going to mention it. I'll mention it now because Bitcoin was down last year. It was down about 8%. Last year was the year that gold reclaimed the center stage. It had been upstaged by Bitcoin. No more. Bitcoin was down. And in fact, gold and silver are outshining Bitcoin again already in 2026. The big loser in 2025 was MicroStrategy, down about 48%. It's barely recovered anything so far this year, a few percent. I think that stock's getting killed this year. I think it'll have a bigger decline in 2026 than it had in 2025 because Bitcoin, I think, could do a lot worse. And that's going to be why a lot of institutional money gets into gold and silver, because they're no longer going to be distracted by Bitcoin. It's not so much that they're going to sell their Bitcoin because they don't really own it, but it was clouding the whole gold story. People were thinking, why buy gold if Bitcoin's going to replace it? If Bitcoin is the new gold, so that kind of, tainted the whole gold narrative.